right. What's up, everybody? Welcome back to the channel. Today is Tuesday, June the 16th, 2026. Bitcoin has bounced up off the yearly lows and is potentially at resistance. We were tracking 67,516. That was the level that we were looking for Bitcoin to push up and liquidate once we took out last week's high. As you can see, this expansion so far has in fact pushed it up to this level. We'll see if we can get that liquidation in the next day or so. We had a BOJ rate decision last night. They did hike. That has caused the FX rollover rates to literally get all jacked up today. It is super expensive to be shorting the dollar today. One would assume that would go down, especially the USD versus the yen. But as you can see right here, the short dollar versus yen, you got to pay almost $5 per day right now. That's high. I mean, it was $1 something yesterday, so it's went up 400%. It's absolutely insanity. And the spread has tightened. So it's just whenever volatility is introduced into the markets, all these things go up. So as you can see, it is paying rather healthily if you want to be long USD JPY. So with that being said, let's go into I currently have an issue with Windows right now, and it's corrupted my hard drive. I don't have any storage left on my C drive, so I'm gonna have to have that looked into, but so it's making things not work properly down here. But let's go ahead and see what we can do here. So your dollar on the daily time frame has switched back to bullish. You are into monthly resistance up here at 100.05. You also have Q4 2025's high. This is the top of the range, but as you can see, when we traded up into just monthly res last week, that was enough to bring the dollar back down for a 21 EMA retest. You have the 21 crossing the 200 here. That is typically bullish, but if you go out to the weekly time frame, you can see the 200 is still above price. So on the weekly time frame, this asset structure is still bearish, but rate cuts are not on the table, or at least not being priced into the market right now. So the way things stand right now, if the Fed doesn't cut or even hint that they're going to cut this year, we're anticipating a dollar breakout. Unfortunately, that's not good for Bitcoin. However, if the Fed does the thing that nobody anticipates them doing, which is cut, then if the dollar can get back under the weekly 21 exponential moving average, we would be looking for a macro bearish move on the dollar. All right, so that's kind of what we're looking at here. And that's going to drive order flow. That's going to essentially drive my bias each and every week. So right now, I currently have a bullish dollar bias, anticipating a breakout. But obviously there's big news tomorrow, so we'll probably trade in an intraday range here. Yesterday we didn't do a whole lot. The BOJ rate hike literally did nothing to USD JPY. We can go look at that real quick. I'm giving you all this because it obviously is going to influence my Bitcoin trades as well. So here's the 4-hour time frame. As you can see, that right here is the candle where you got the rate hike. So hypothetically speaking, a rate hike should put bullish pressure under the yen, thus making this roll over. And we can go right to when the rate cut or the rate hike happened. You can see that it's not a very big move. So, but and they've bought it right back up. And you know why? Rollover rates are paying dollar longs right now healthily, very healthily. So we have dollar long positions on, and until we get at least a 21, at least a daily 21 close, we have to stay bullishly structured. So that's currently setting up a trade over here on silver. If I pull up silver, you can see that silver had a nice bounce last week. We go look at the weekly time frame. You are currently trading above last week's high. So right now on Tuesday, we could be setting the weekly high here. Now, being that we are above last week's high, it is a dangerous short because you are currently seeing upside expansion and upside continuation. And obviously, if you take out yesterday's high, today you will have a bullish engulfing candle. Obviously, there's still plenty enough time for this to close bearish. So the way I'm looking at it is I definitely want to be short. I don't want to be looking for longs here, as everything is, too dangerous to be looking for dollar short plays. Too expensive to be looking for dollar short plays. So that's what we're kind of working on. Unfortunately, that's not great for Bitcoin in terms of the near term. So I'm assuming people will be looking for shorts today on Bitcoin because the dollar is structured for a break. Now, there have been some other things that have switched around, mainly the funding rate. The funding rate has switched back around to where it is no longer good. No longer good to hold shorts for a long term. This is the annualized funding rate. So the funding rate does not matter for intraday traders. Obviously, you don't care about that because the funding rate is every 8 hours. Where the funding rate comes into play is for people that are holding positions on futures for long periods of time. So it is very important that we look at the annualized funding rate because it affects long duration positions. Big money, in other words, right? Big money is not nimble. They don't move in and out every single day like we do as retail. But anyways, it's back to negative now. So that means that bulls are being paid to hold long positions. Before you say that this doesn't matter, just look at the chart. I mean, when it became a good time to put shorts on, when you were getting paid to hold a short, price literally rolled over. And in April, it was no longer good to hold shorts. It was good to hold longs. The entire month of April, price advanced. So I would argue that the funding rates are directly influencing Bitcoin's near-term price movements. All right. So now that we're getting back into red territory, that means the sellers have to pay to hold shorts and the buyers get paid to hold longs. It's right there on the neutral line, so the amount is minuscule. I've been in a Bitcoin long for quite some time now. Let me see here. Which one is it? It's going to be this one. Nope, this one. And now my position is very small, obviously, but I've only paid $8. Or I've paid $0 to hold the trade. So I've been in it for almost a week now, and the funding is nil, non-existent essentially. So I mean, obviously the longs aren't getting paid heavily yet, so I wouldn't anticipate that influencing Bitcoin's price on the very near term. But the deeper red that goes, obviously the more attractive it becomes to hold longs. So near term, potentially a pullback, especially with the dollar looking like it wants to break out. All right. I mean, you can stop looking for Bitcoin shorts if the dollar gets under the yellow 21. As long as price is above the yellow 21, the risk is to the upside on the dollar. And for Bitcoin, it's still to the downside. Now, we reclaimed June's VWAP, so that's good news. And in terms of the deltas down here, it's rather mixed, which is also good news. It's not constant one-sided to the downside. So that's good news as well. Today's kind of a mixed bag. I would probably be more looking for the short side of the trade than the buy side of the trade, especially because Bitcoin is currently testing the 21-day exponential moving average. And that means you are also getting close to testing the 50 on the RSI. So these are typically the areas that we look to put shorts on. All right. So I'll let you do what you want there with that. I'm going to focus more on the silver trade. Now, this looks like a trap to me now that we've taken out the low. So any entry for the short inside of this blue 30-minute candle is probably a good entry. Stop above the high of day. Right there's your high of day. That's how I'm positioning. Here is my live real money portfolio. And you can see I already have a short on silver. I put the short on yesterday. I collected some premium for being in that trade, as it is paying the sellers. The funding rate is paying the sellers. I made a little bit of money. Ultimately got stopped out because I have a real tight stop. I'm looking to not lose very much money for this idea. It is just a trade idea. So I have to be, when I'm wrong, I have to be out of the market. I don't want to be wrong in a big way. So I take very tight stops in anticipation that it gives me more opportunities to get positioned for the trade. I do not want to be short. Oh, and I have 2 Bitcoin long positions on. Let's go look at that real quick, and then I'll finish up with the silver trade. I think you're going to get another opportunity to get short on silver. But here's both long positions. So as you can see, my leverage on Bitcoin is cross separated. This means every time I take a trade on Bitcoin, it's a brand new position. It doesn't average me into one side. This gives me the ability to take multiple trades, get in on a long-term hold, and then scalp around that core position. I would not recommend anybody do this unless you are very good at mitigating risk, because you can lose twice as much money this way. All right. But yeah, so this long is the long I'm talking about that I've been in for several days now. Took profits on it, so I'm sitting in a very small position down here. It's fine. It's levered up though. So if Bitcoin does start to really get going to the upside, this trade will pay me decently. And then yesterday's scalp, we took a long on Friday, and I took profits on that yesterday. So 2 very small positions open here. I've got this stop loss trailed up to $75 positive, so that way I don't lose all of the unrealized. I'm not looking for a big move today because tomorrow is the Fed. But I think the last Fed meeting we got, Bitcoin was very active the day before the FOMC. So we'll see what happens tomorrow. I think we're probably going to get a lot of nothing. This guy has not spoken to the press one time since he's been in. So he is very tight-lipped. And I also watched an interview where he said he wishes that the Fed was more tight-lipped. So I hope this guy isn't the kind of Fed chair that isn't going to basically say anything when we have press conferences. But we'll see. As tomorrow at 2 p.m. or 2:30 Eastern, he will go live for the first time since becoming the new Fed chair. That's kind of what we have. We have a dollar long bias today. We think what the dollar's doing here is a pullback at best. Be a long opportunity at yesterday's open if you want to try that. Make sure your risk is mitigated, as I do not know what price will do. I never know. Nobody knows what price will do unless you're in the White House. So yeah, that's basically all we're going to do today. The long term, I like Bitcoin. I think Bitcoin can absolutely experience magnificent growth because of the way the current macro backdrop is set. With inflation up, it has brought real rates back down to below zero. This means that big money, or anybody that has money in a money market fund, is not making money. They are actually losing money. Even if your bank is paying you 4%, because the real rate is negative, you are losing money in a money market that pays 4%. So that means there is literally $8 trillion in money markets right now that are losing money. Bitcoin is very attractive as it is down 50%. So it is half off. It is on sale. So if that money rolls into Bitcoin, because Michael Saylor and the other company that runs the ticker SATA, because we have these Bitcoin treasury companies, so to speak, generating digital credit, you have a potential supply shock. So if that money market fund comes rolling in, even a small amount of it, then Bitcoin is most likely mooning. Now, if the Fed cuts interest rates as well, that'll be just even better. A lot of people are assuming the Fed is going to cut, but the market is not currently pricing that in. So yeah, long term, I like Bitcoin. I want to be long Bitcoin. I want to own Bitcoin. But I have to figure out what to do with the other money, right? The money that's in the money market fund. So it's not just big money, it's me too. I have a substantial amount of money in a money market fund that I need to do something with. Obviously, I'm very risk averse on that money. I already own Bitcoin with a substantial amount of money. I don't want to be over leveraged, but I would love to generate at least a small yield. So I need to be searching for somewhere to put that money. I am most likely going to put that money somewhere. I haven't made my mind up completely yet where I want to put it, but I would love to go into STRC. It's just hard for me to do that as long as Bitcoin is trading under Strategy's cost basis. And that price is 75.7 as of the last time I checked. Let me pull up Coinbase real quick. Coinbase's data feed has been laggy as of late. Well, it doesn't appear to be on there. There you go. 75.7 is where Strategy's cost basis is. So as long as Bitcoin is trading under this, it's a risky trade to put your life savings or whatever, even if it isn't your life savings, if it's a small amount, whatever, to put it in the STRC. Because if Bitcoin were to have another black swan event and continue to dump, that would put a severe pressure on STRC and things like SATA. Now, I was looking at Strategy's preferreds yesterday. As you can see, this is Strive's SATA. It's literally up at par at 100. STRC is still in 95 territory, which is the midpoint of the range. 90 is the bottom of the market, 100 is the top of the market. And they fluctuate the dividend payment to essentially keep price at par with 90 and $100. So hypothetically speaking, as long as Bitcoin is above their cost basis, preferably positive on the year, then this thing should trade at 100. But the risk is that you lose $10 per share because it is a preferred. But a flash crash or a black swan event on Bitcoin could have it dump under 90. And if you get under 90 on something like this, it could be at 50 or 40 in no time flat. So that's where the risk lies with these preferreds. But I was looking at other preferreds. For some reason, they are not doing as good. For instance, here's Stride. It literally had a nasty down day yesterday, and Bitcoin had a nice up day. STRF, still on the lows. STRK, also appearing to be rolling over here. And then MicroStrategy is going to look similar to Bitcoin, but also had a red day yesterday, which is odd because Bitcoin was up. So we have a few things happening right now in the market. But yeah, today's trade on Bitcoin would definitely be a sell. And then if you miss that sell, you can take that short on silver. I think it'll be fine. All right. Hopefully everybody's having a fantastic day. I myself am not. So, I mean, the trading is fine and all that. But I'm going to push through and try to get this stream done today. Tomorrow I'll probably feel a lot better than I do right now. So most likely we'll go live with when the Fed speaks tomorrow at 2:30. As long as, everything works out with the internet and the PC. I haven't had any issues with the internet in a long time, really. And then when I do, it's just hit or miss. So we're good to go. Oil, we've made quite a bit of money on oil. I have not been in it on this last drop here. So I am looking to re-enter. I'm afraid, I don't know if we're going to get a chance to. To be honest with you, it is massively oversold down here on the 4-hour time frame. Probably going to see a bounce at some point. How aggressive that bounce is, I don't know. But you can see since oil was up at $90 almost, it's literally been pretty much oversold. And if you go out to the daily time frame, you're going to see the same thing. It's oversold. Now, that doesn't mean it's a buy. It just means if you're short, you should be taking profits down here because a bounce back up to the 21 is a potential. That's where I'd be looking for a re-entry, maybe slightly above the 21, depending on how aggressive the bounce was. But I am looking for a bounce on oil now, or not so much looking for a bounce, just assuming you're going to get a bounce because it's technically oversold. But long term, I think oil's going much lower. Now, this will bring inflation back down. All right. Most likely, this will bring inflation back down. And then that could potentially get, if it gets down low enough, then the money market fund or your real rates will get back up into positive territory again. And then the money markets will be positive again. So that's also kind of what I'm waiting on, right? If oil dumps here in the next week or two, there's really no reason to move the money out of money markets. But if inflation stays up or if the real rate stays negative, there is a reason to move it. A lot of really good macro backdrops for a very big bullish move on Bitcoin. I think the sell side of Bitcoin is mostly played out. You could make fresh lows, but if you're looking for like 20K, 30K targets, I do not think you're going to see that. All right. So be careful if that's what you're doing. I have been buying Bitcoin pretty aggressively down here for the cold storage wallets. Good morning, everybody. Afternoon, Oxum. Where would you look to put risk again on Bitcoin for a scalp? Well, today I would be bearish. Today I would have a short. I didn't get in the short this morning because I was outside. So, but I would have wanted to put on a short, similar to what silver is doing this morning, how it traded up like this. Right here's your 4-hour resistance. If this is going to be a trap, typically we want to see the next candle open and push lower, or the one after. And we've already gotten that push lower. This doesn't mean that silver is going to go down, because of course the dollar could, even though it's expensive to short the dollar could roll over, right? So it doesn't mean shorts on Bitcoin is going to work or shorts on silver is going to work. But if I wasn't outside, I would have looked to put risk on up in here for the downside trade. Up above the open is always a good place to look for shorts, because if you're looking for a downside expansion, then obviously you can target the prior day's open or the prior day's low and lower. Now, where would I be looking for longs? Probably at the week open, as long as that holds support. But yeah, with the Fed meeting coming up tomorrow, it's going to be, it could be a very volatile week. You can have a really big dump, you can have a really big pop. So if I was looking for positions on Bitcoin to the upside, the week open is kind of just right there. Maybe the weekly low or a little bit lower, right, would be better for long ops. I think the best place for long ops would be about there. If you start pushing deeper than 63, then you're probably coming back to the lows again. I want to see higher low support be built in for the upside to continue. With that being said, you're under the 21 day, so the pressure is still bearish. Pressure is still bearish. Got the market getting ready to open in 3 minutes. So like anytime you've got a level and you're looking for that to potentially be a trap, what you want to do is you want to wait for that 30-minute candle close. As soon as you get the close, that's when you send that order off. Because then you can get your stop up above stuff. If it continues to push, you'll be stopped out. Very small loss because you're wrong. But if it is going to be a trap, you will be positioned nicely for it, as you would have been filled literally at the top of the trap. We don't care about moving averages on the 30-minute time frame. Once we're under the 4-hour, we're not really focusing on moving averages. The week open is right here on silver, so that means you are currently playing around with the VWAP. So this could be support on silver. We'll see what it does. But with the current structure and the way the dollar looks, I think the only trade to make here, technically, because of the technical signals, would be a short. Silver did get pretty oversold down here. And you were also testing the 200-day exponential. So last week, I was telling people to be very careful if you were looking for silver shorts, because you could bounce. And that's exactly what it did. So now that you've bounced, you've pulled that oversold reading back up into the trading range. So it could still pop up above the yearly open. Obviously, you've got the 50 up at 74.37. So if it were to get back up in there, I would also be interested in a short. But for this week, I like where it is right now. All right, it is 9:30, so the bell has rung. We'll see what happens here today. I would have loved to be able to get into the Bitcoin short. All right, SPCX here. I actually got long this, but when I had to go outside, I got stopped out and was not able to put the trade back on. So that wick right there literally got me. And I just realized that, looking at my broker, that I do not have SpaceX long anymore. That sucks. All right, it is what it is. SpaceX, we were anticipating a bounce here at 199.06. You're kind of getting that bounce. Yesterday, SpaceX was, trading very choppy until it broke out. Once it broke out, you started squeezing shorts. Now that you're into a short squeeze and positive on deltas, I would only be looking for upside scalps on SPCX for now. Hopefully anybody else that got long SpaceX this morning, because I did post it in the Discord that I was looking for longs at 199. Hopefully you didn't get stopped out and you're still good, because I expect this probably is going to continue to go up based on that short squeeze. Let's see, where's volatility currently setting? VIX is setting at 1610. So back down almost to where it spiked from June the 5th. Price opened that day. Here, let me get you up there. So right here is the VIX. So we were looking to buy the S&P 500 once we filled the gap on the VIX. The VIX filled the gap last week at 2350. That's where we were looking for longs on the S&P 500. As you can see, the VIX did fill that gap and has since retreated. So that was a very good call out. The open was 1587, so we're close to back there. And then on DVOL, which is the VIX for Bitcoin, you're also back off the highs, which is, more bullish than bearish. For sure. It's going to bounce, potentially. Potentially, yeah. Yeah, you could bounce here for sure. But I wouldn't be anticipating a huge bounce. I would say most of the volatility has been sucked out of this market. And as long as vol is low, that's not great news for bulls, but it is more bullish than it is bearish. S&P looks fine. Yeah, S&P is current. This is not the S&P. What the hell? The S&P is currently just in a buy the dip mentality. You are at the top of the expected weekly range for this week, so keep that in mind. If the S&P fails at 75.75, you could look for short side scalps on it there. That's the only place to look. You do not put shorts on if it is trading above 75.75. It's as simple as that. Because if it's trading above 75.75, you are currently in bullish upside continuation. It is not a short. All right? But yes, if it gets up there and fails, you can put risk on there, as it is the top of the expected move high. You also have a clear short squeeze again here at the 21 as you gapped way up here this week. So that big gap probably will want to fill. I'd say I wouldn't be anticipating a large breakout on the S&P 500 today with the FOMC tomorrow. So today might be a decent day to look for that short side scalp on the SPOOs. Make sure you take profits if you get a 10-point move in your direction. And then let's get this on the futures, or the asset that tracks the futures, so that we can see exactly what's going on. So if you're trading CFDs, 75.81 is where you'd be looking to put that risk on, and only if, actually, yeah, you could potentially watch this candle and see if this candle is a trap. I don't think you would get back up there like this morning, but it could. If it's going to stay squeezing shorts, there's nowhere to look for the short. It's just going to break out. But yeah, it looks okay. We'll see what happens with it. So here's the short on silver. We'll see what happens with it. Let me make sure I put a stop loss out before I forget. Very tight stop. Got a pretty good size position on it, so if it does give us a nice move lower, then we'll be able to take profits quickly on it. All's good. Morning, Tony the Fish, Paper Wiggleman, Santos. What's up? Tomorrow FOMC meeting can move the market up or down. Waiting to see it. Yeah, it could be volatile for sure. For sure. I really don't like what the dollar's doing here, to be honest with you, because we broke out a couple weeks ago. So I was actually perplexed as to why the dollar refused to go higher. And then when it did go higher on Thursday, it got beat right back down to the bottom edge of the weekly range. And then so far, we've gone nowhere. So I'm kind of perplexed as to what is happening here with the dollar. I mean, the technical signal is obviously look for longs, but there is near-term weakness on it for whatever reason. For whatever reason. So I'm kind of afraid that this thing might be getting ready to dump because the long trade is so crowded. it's very easy for anybody to see that right now dollar short trades just are super expensive. So if you're not looking for shorts against the dollar, that means you're looking for longs. So the long trade is just overly crowded, and it's making price back off, which is very, very perplexing. Or you have market participants are willing to go ahead and put those short trades on the dollar because they have, who knows, maybe some kind of data that tells them that the Fed is going to cut. So they're positioning ahead of that. So like I said, just because the DXY is along from the technical aspect and because of the rollover rates, it makes it even more of a long, doesn't mean it will work. So we'll see what they have to do tomorrow. Hopefully we get at least a scalp out of today. And I'm short via euro, so basically that means I'm short euro dollar, which means I'm long dollar. And euro dollar has retraced a lot of its range. Let me put this up real quick for you. So right here is where my short is on euro dollar. And technically it's still a short. I see no reason to close the trade. And because I'm being paid to hold the trade, there's no reason to close the trade. So I've already taken profits on it because it started as a scalp. So when I got the move in my direction, I took profits. And now I'm just sitting in a small piece collecting that daily rollover rate. So the P&L is just continuously growing with each and every day, as long as price is under 1.16524. So there is no reason to close it. But it has been retracing, and this is that dollar weakness that I'm talking about. It's very weird. But with the macro backdrop and with the rollover, it's still a short. You know what I mean? It still is a short. I see no reason, none, for me to close this trade and then look to take the opposite side of that trade, especially with rollover rates being so damn expensive right now. I mean, to hold a euro dollar long, you're going to pay $3.40 on every 10,000 units per day. And tomorrow, that'll be triple. Every Wednesday, the rollover rates are always triple. So you'll be paying over $10 tomorrow on every 10,000 units. On a one lot, that's $100. That's quite a bit of money to lose just the fees. So you can see why it's very advantageous to be short as you get paid. But price is king ultimately. Price is king. So we have to do whatever price says. The short setup is still here and still valid. And to be honest with you, even if it were to retrace back up to 1.16860, if it were to liquidate that and then fail, I would put the trade on again. Now, we'll have the Fed tomorrow, so if the Fed is hinting like they're going to take the road of cutting rates, then ultimately that could shift to where it's not so expensive to hold dollar shorts. But that's not what we're seeing today, currently. But today, currently, the volatility is still up a lot. Basically, what I mean by that is the BOJ hiked interest rates yesterday. So that should have tightened this spread up a bit. It will in the future, but still slightly. And instead, we saw the exact opposite. Not only did it not shrink, it ballooned by 400%. So that is crazy, man. Crazy sauce. Yeah, you can see $4 to short USD JPY every day. That's expensive. You're not going to catch me trying to hold a 2-week trade, paying $4 on 10,000 units. It isn't worth it. You're just paying money to be short an asset that is clearly not trending lower. It's not smart. All right. I am positioned in Bitcoin at 64K long. Hope it works out tomorrow. Let's see. 64K longs. It's not bad. Price is still a little bit close to that, but it's not bad. I kind of like it. I think you're fine there. Like I said, this down here, if Bitcoin gets back under here, I'd be concerned for, all the longs at that point, because then really and truly, if you get under here, there's no reason why it couldn't go down and make another fresh yearly low. But if it's an insignificant low, like it has been doing, like this low was, this is a very insignificant low, as you just liquidated February's lows and bounced. So this is an insignificant low. Essentially what you're doing here is you're building in a bottoming formation. It's when we break these levels and then continue, that's when it's something else, right? That's when you can clearly say, okay, well, this isn't going to be a bottoming formation. It is literally trending lower. So that's bad. But whenever you get these type of moves, it shows you that there is no sellers that want to, they don't have confidence that price is going to go much lower. So your short traders that put on shorts here, and then again here, down here, they're closing those trades. And that's why you're getting this bounce, right? They do not have confidence to keep those trades pushing below 59,930. So you can see it play out when Bitcoin's making highs and when it's making lows. It's called a Wyckoff accumulation formation. And then when it's at the top of the range, it's a distribution. But it's the same thing. It's just a 3-drive bottoming formation. It speaks to there's just not any confidence for lower prices. You know what I mean? That's why the pattern tends to work out. I mean, you can go back in history and look at all the bottoming formations when you were breaking those lows. So like right here would have been that low. You broke it, but could not get downside continuation because the sellers just did not have any confidence that it was going to go much lower till it, got back up into shortable opportunities again. Then they sold it again. But same thing. When price broke through the lows, they closed those positions because they just had no confidence that they were going to get a trending move. That creates that 1, 2, 3 drive bottoming formation, or that Wyckoff accumulation. It's the same thing. Up here, same thing. Once you break above the highs, the buyers back off. They have no confidence that Bitcoin's going to continue. It creates an insignificant higher high. Then the buyers jump back on it again. Same thing here. And then you get the washout. 1, 2, 3. 3 drive topping formation. It's identical to the bottoming formation. We could ultimately see another lower low on Bitcoin. But what Bitcoin does down there will be very telling for us. As if you get downside continuation, you have a legit breakdown and you could see much lower prices. But if you just make another insignificant low and bounce again, you load up. You know what I mean? You get long. And anticipation that a bounce is coming. But that's just technical trading, right? It's price identification. It doesn't always work out perfectly like that. But that's kind of what we got going on here. So although we can make fresh lows, I am not confident you're going to see $40,000 Bitcoin. At this point, I'm not confident you're going to see $50,000 Bitcoin. Now that the funding rates are switching back to paying the longs, that's another factor that is kind of, bothering the shorts. Because do I want to pay to hold this thing and look for the breakdown when longs are being paid to hold? Like I said, right now longs aren't being paid just yet, but the sellers aren't either. So we could see some very sideways back and forth price action for a few more weeks, regardless of what the Fed says tomorrow. I think the only way tomorrow's meeting will be beneficial for Bitcoin is if he leans more dovish on rate cuts. If he comes out and hints that they will not be raising interest rates this year, they will probably, depending on what data says, maybe even be cutting. That would be very for Bitcoin. But if it's the other way, no, hell no, we're not going to be cutting interest rates. Are you crazy? Blah, blah, blah. If anything, it'd probably be a hike. Anything like that, Bitcoin probably gets nuked. But we'll see, right? We'll see. All right, I'm positioned. Oh, I just read that. Sup, fam? What's up, Jewelry Affairs? Trying to position myself today for tomorrow. It's risky, but I'm going for it. Today? Wait, didn't I just read you say that you were positioned at 64K? Yeah, so if you buy again, you're going to severely destroy your cost basis. So if you're already long at 64K, if you buy it at 66,120, you're, depending on the positioning size, your new cost basis would be much higher, thus being more prone to eating a stop if you get a lot of volatility tomorrow. So be aware of that. Now, if you have your leverage situated the way mine is at being cross-separated and not cross-combined, then you would just be taking a whole brand new position, and that's different. Bitcoin is the only asset that I use cross-separated leverage on. Every other asset that I trade is always cross-combined. So that just means you stay on the same side. Your averages will get your averages will be different, but I just don't see a valid setup here to put a short on because I missed it. If I was going to be looking for the short, it would have been, at best, I would have been here, right? Like, yeah. And I'm not just saying that. It literally is where I put the short on for silver. It happened at the same time, essentially. So I had just got back in the house when silver was pushing up here, so I was able to get that position off. And by the time I looked over at Bitcoin, it was already too late. I am never going to chase price. Bitcoin was already testing the VWAP. There's no way I'm firing a short off right there. No way. It's too risky. A bounce back up to 66.5 would stop me out. I'm trying to position in and around the wicks, usually. So like if you look at this on a 4-hour, you'll see the wick. And I'm literally short up here. My short entry was a little bit more of a chase. So my short entry on silver is 70.94. So right about here. SpaceX flying. I can see this thing not pulling back for a while just because of FOMO. Yeah, I agree with you. And like I said, right now you are currently squeezing shorts. This is why I wanted to get long this morning. I was long. I got stopped out with that wick right there. Such a pain in the ass. Because I called it out perfectly in the Discord, getting long at 199. I fired the trade off. And this would definitely be a profit-taking move here. So if you got that trade off this morning, you want to take profits up here. But yeah, you see that That is a lot of buying pressure. Bulls are absolutely in control of this. They know that the shorts' backs are against the wall, just like I did. So, yeah, that's what you do. If you're scalping momentum, you look for positions on the pullbacks. This is the pullback. That's when you get long. I know it's scary to do it, but that's what stop losses are for. Unfortunately, mine got hit. Very, very bad. I'm long from that low on SpaceX. Good job. Good job. Take profits, man. That's a big move. You're looking at a 10% rally. Take profits. If you're using any kind of leverage at all, that's a nice trade. Very nice. You go over there to silver and compare that, right? If I'm in it at 75.94 or 70.94, right now I'm sitting on a less than 1% move. Take profits. You got to pay yourself when you put the risk on. And then leave a small piece for upside continuation, right? If SpaceX continues to just grind up for the next 3 weeks, that small piece you leave on will ultimately end up paying you more than this first original trade. It's a win-win scenario. Shorting ADA here. You took profits too early. Nah, you never take profits too early. Taking profits is taking profits. Nobody knows how high it's going to go. If you try to get a 10% move every time you get in a trade, you're going to get stopped out. Always. So always take profits when it goes in your direction. Always do that. That is the best way to grow an account. And that's what you're trying to do as an aggressive trader. Cardano, USD. I guess Coinbase is fine now. You're taking a short right here. Yeah, you're taking a short at a very bad place. Your short is at yesterday's low. So basically you're chasing the short. You're taking a short at support. Like literally at support. That's the wrong way to do it. Now, if it breaks down, then you'll be lucky, right? You will have made money. You will have been right. But if you get filled on the short and it literally just goes back to this candle's high, you're going to get stopped out. It's literally at support. Damn near the worst place to put a trade on for the short. Now, I think it'll be fine if the dollar does go up all day. You do have selling pressure, so the sellers are more aggressive today. But at the same time, your positioning is not good. Where you're actually looking to put risk on. You're chasing it. You missed it, and now you're trying to get in here. Not good. You should have got in at the wick up here, and even then, it's still not a great place to look. It's just because the range was so small. The best place is always going to be at the prior day's open or the prior day's high. Anything below that, and you're kind of chasing it. Anything above that, and you're expecting a price to reverse because you just want it to reverse. But trading, the way that I'm trying to teach you to trade is you don't have to try to even guess what price is doing. Like you don't have to try to guess direction. You can allow price to simply tell you okay. So before you take a trade, every single day, ask yourself this question. Are we I have a short side bias. Are we retesting yesterday's high? If the answer is no, then you don't put the trade on. All right? And then if the answer is no, because it's above it, like it already tested it and broke out, that's another do not put the trade on indicator. And as long as you do that, you will never, ever, you're not going to have a really great win rate, but still you're mitigating risk. You're keeping your losers small. So when you are right, because there are going to be times when you will be right, those winners will cover the losers. So right now, this would be a pullback. This is a breakout, really strong breakout, because you're well above last week's high, right? Well above it at that point. So strong breakout, moving higher. The last liquidation point was here. This day did the liquidation. Then it rolled over. This is a bear trap. This part of that wick. If we were to go look at this on a smaller time frame chart, that would be your trap. And it worked as it exploded higher. So anything above this, because you've already broken out, is upside continuation. And to try to short upside continuation, most of the time you're going to get ran over. So here is a good place to potentially look for shorts, and then here, but today isn't in that range. You didn't get up there. So it is just not a trade. As long as you can't trade under yesterday's low, that means dip buyers are buying. You're potentially on the wrong side of the market. You need a breakdown and then a big move to make money on that. Be careful. Just be careful. That's all I ask. Putting trades on at better places is going to ultimately benefit your account. Being patient and a sniper, that's the opposite of chasing. I don't know about Cardano in terms of what they do or what it is, like how it makes money or whatever, but the chart looks like dog snot. So I kind of understand why you're shorting it, but like you're literally, this thing has been killed already. There just probably isn't much juice left to squeeze out of this thing. There could be. I mean, it could still go to zero from here, but what are the odds, the probabilities that that happens? If it's just a scalp, that's fine. If you get the move in your direction, take profits. Now, I mean, it is in the middle of the weekly range, so there is, I guess, always that chance that it could break down. All right, so silver is refusing to go lower here. That's concerning. Concerning, but it's not terrible yet. Here, I'll just leave it on this. Let's go see what the dollar is doing real quick, because USD JPY is literally breaking out. Dollar is still positive on the day. Excuse me. Yeah, it looks okay. Yeah, it looks okay. It'll be interesting to see if it can continue to make higher lows. It definitely looks like people are buying the dip. So far, so good. My position on silver isn't being threatened or anything. It's just not making lower lows yet. I shouldn't have said concerning. I should have just said it's slow. Being slow. Silver, I mean, oil's still on the lows. I can't believe it rolled over. I actually thought it was going to bounce yesterday. The news probably had something to do with it. I don't know. S&P is, what is it doing? Really nothing still. Like I said, it probably wouldn't get up here with tomorrow being FOMC. I could definitely see it pulling back today. But the buyers are more aggressive, at least on this CFD. This is a CFD. Alrighty. Yeah, it's all-time low. Yeah, I get it. Oh, short with that $5. Question for you. What does it tell you when DXY is moving same direction and gold and silver? Wait, so are you asking me, so like DXY is correlated to gold and silver on a daily basis? That can happen for sure. It doesn't tell me anything. It actually makes it more difficult. So like if the dollar's moving up and silver and gold are both moving up with the dollar, then that literally means that gold and silver are stronger than the dollar. That's all it means. So don't look at it in terms of, so basically we know that silver and gold is trading against the dollar. It's a 4x pair essentially, right? Now we know that bullion is bullion, but it's still priced in dollars. So yeah, they can be stronger than dollar. So if you get it like that would happen during mania most likely, like when it was breaking out to all-time highs and stuff like that. You see a lot more of that. Days when the dollar's up, but still gold and silver are still ripping. That just means there is literally so much demand coming into them that they're just stronger than the dollar is. That's all it means. It's not a sign of anything other than just pure strength. That's why I said, like, if Bitcoin were to rally, even if the dollar is breaking out, that would be a very, very good signal, as it would show us that Bitcoin is stronger than the dollar. So even though it's rallying, that just shows us that there's so much demand coming into the asset that it's stronger. It's a very good sign for strength. For continued strength, it's a real good sign. You could also look at it in terms of weakness too. So if the dollar is trending lower, if the weekly range on the dollar is going down, making fresh weekly lows, and silver and gold are doing the same thing, that just means they are weaker. That means people are literally leaving gold and silver as fast as they can. Yeah, it's not so much correlation. It's just, I'm not looking for the inverse correlation. Most of the time I'm just looking for what the dollar is doing. And then if there's a technical setup on silver. So even if I'm not looking at the dollar chart, even if I don't know, pretend like we're in some weird realm where the dollar does not exist, this chart is still bearish. So I would know that I only want to be looking for shorts on this chart. It's clear as day. The 200 is currently above price. Now, I know that price can go up there, but in terms of a trend, this is weak. It's bearish. This would be a dead cat bounce or a short covering rally. So anytime you get short covering rallies, you give it some time, not on the same day. Like shorting it down here is way too early. Way too early to look for shorts. All right, you want to give it time, let it grind higher. Then when you start messing around with this purple average, that's when you can start putting on shorts. We could still be early here. We got a very good signal, a resistance line above us being the yearly opening range. This is your 2026 year open. So right now, silver's down on the year. So that's kind of a good sign for weakness. It's down on the year. So we're looking for that to continue. It never means we're going to be right. But, you know, it's a pretty good indicator that that's the trade to make. If you're going to put risk on it, it should probably be lower. The trend is definitely down, right? Like it's lower highs, lower lows. Haven't even made a lower low yet on silver. You did make a lower low on gold though, but it's the same thing as Bitcoin, right? We could be seeing a bottoming formation. So being short here could absolutely be the wrong call. See how gold did ultimately make that lower low? You did make that lower low. And then if you stretch it out, you can see there's a lower low. So you kind of have like this scenario where you're making kind of insignificant lows, or the sellers just don't have confidence that it's going much lower. So they back off. Gold is actually still a little bit low, to be honest with you. Yeah, I mean, it's still a little bit low. It could go much higher. I think 45. So like if the short doesn't work here, then I would probably be willing to try it again at about 45. See what it does up there. And where's the yearly open on gold? Right there. The same scenario here. There's your year open on gold. So it is positive right now on the year, but just slightly. So the seller's selling here because of the year open. So I know that means it could spike again. So getting it right now down here without it testing yesterday's high is a risky, more aggressive short. The better trade would probably be patient and wait to see what happens at 43.69. You know what I mean? So us shorting it today is just an aggressive short. That's us saying we don't think it's going to have enough strength to even get up there. So naturally we can need a stop. Yeah, it's identical. You haven't even retested yesterday's high yet. And that could happen. So we could be a day early or just a few hours early. If it gets up there and fails today, then I would potentially try it again. But now I have a rule to where I only do that 3 times per day. All right, 3 times per day. So if I miss 3 times, I'm done for the day. I just take my lumps and move on to the next day. I don't need it to go much lower and I'll be able to take profits. Yeah, if I can get another expansion out of this down to like here, I would say I'd be up enough to where I could take profits. It's a small account, so I'm looking to generate about $300 a day on this account or whenever I put risk on. So I'm risking 30 bucks on the stop. That gives me 3 attempts. If my directional bias is right, then I will nail it in the second or third entry. But if I'm wrong on directional bias, I don't want to continue to keep trying to short it all day because it's going higher. Therefore, I'm done. So I lose 100. That's max loss for the day to try to make 300. So it's a 3-to-1 risk to reward. Alrighty. As how tightly they are correlated. So there's an indicator that you can look at for correlation specifically. You want to look on daily and weekly time frames, but it's called the correlation coefficient. It's right here. Correlation coefficient. The way this indicator works is you pull it up and it'll tell you to type in what you're wanting to look for a correlation with. So you just click that and put in DXY and then hit apply. And then that's down here. So the way the indicator works is the 0 or the neutral line means they are not correlated. 1 means they are highly correlated. And then -1 means they are inversely correlated. So right now, there is a strong inverse correlation relationship. Right now. But you can see there are times when there is literally 0 correlation. Or even times when they are correlated. But like I said, that's going to be when, they're just super strong. And it is super strong through here. That's literally all-time highs. So generally you're going to get a correlation if the dollar is moving up and silver is stronger. It'll be correlated. But it just means there's so much demand coming into the product. Right now, with a good strong inverse correlation, if we have a bullish bias on the dollar, then we should have a bearish bias on silver. It's not, it is literally nothing special. Nothing special. It's not some secret strategy or anything like that. A lot of people look for that stuff. But yeah. Starting to see a little bit more of a move here. Let me go ahead and set a take profit so that way if it does break down, I'll get filled. Let me cancel the stop loss only, please. Okay, now I can set a take profit. Oh my gosh. Partial. Let's set it at, let's see what 69. Where's 69? Down here. So we want to be filled at about 69.44. And if we take 75% of the position off, yep, that would be 330 bucks. So good. That's what I'm going to do. I'm setting a take profit at 69.44. And then that's just shy of the prior low. Or the prior lows. But clearly there's 4-hour support right here at 69.86. It's going to have to get through that in order to fill me. Hopefully the downside gets enough momentum to push it through that. And I can move it slightly higher, as that would be like a $320 fill. I could finagle it to where I take a little bit more money in terms of position size off, because I have a nice position here. So closing 70% of that means I'm going to leave $300 on it, which would still make a decent amount of money. If it gets a large move lower, like something like this on $300, that would be a huge win, comparatively speaking, for this account. The account is doing good now. It was struggling a little bit a couple weeks ago, but it's moving, it's cruising right along. Now, like right now, there's $784 of unrealized gains open on the portfolio. It does not take long once you get a room, a cushion. Once you have that, you can open more and more positions and just cycle it. And once I get to about 15K, I buy Bitcoin with the leftover. I mean, it's fine. All right, so we're actually at $345 worth of P&L right now, but it needs to come down here for me to get filled and book $300 of realized gains. If I have to finagle it, the position sizing and stuff around, I will, because it is into support here. But things are looking good. There's no reason to stress out or worry about it right now. That's a bearish engulfing candle. That looks good. Since this is weeks, that means this candle will close at noon. So there's about an hour and 40 minutes left on this candle. That's enough time for this candle to close as a bullish engulfing also. But the further down it goes, the more I like it as a bearish trade. The more I like that it's probably going to go lower. But still, tomorrow's FOMC, the dollar could literally stop moving. Especially right now, because the USD JPY is literally liquidating Monday's high as we're speaking. So the dollar could fall short here any minute now. I'll show you what I'm talking about. Give me a second. Let me pull it up. So like you see how you're taking out yesterday's high right now on USD JPY. So that's if that's all they were looking for, if that's their profit target, then obviously you could see some scaling out happening now. That scaling out could ultimately make this roll over for the rest of the day. If that were to happen, then silver is probably not going to continue to break down. It could start to bounce. So we're kind of in this scenario where, because of the news tomorrow, we have to look for more of a tighter range. I mean, this is the daily low. I wasn't looking for a fresh day low. Let me fix this a little bit. Let me see if I can get out a little higher. All right, let's do this. Let's go back up here. Let's fix this. So we want to set another partial at 60. What was it? 69. Let's see if we can get out at 69.70. Oh. Yeah, obviously we don't want to get out at 6,900. That would be not good. And if we take 78% of the position off, 75. So basically all I'm trying to do is get this number above 300. I'll drop it down to 65. Almost there. 60 does it. Right there. Oh, and you can see if I would have done that earlier, I would have got filled and I'd be done for the day. Or at least done for the day on silver. So yeah, that kind of sucks. Let's see if we get a push back down there. Come on, you can do it. It didn't. It would not have filled me. There's room in between that low tick and my entry. We still have plenty of dry capital here. There's still 2,600 available. Plenty. But they're just, I didn't see many other trades that I liked, to be honest with you. This one was definitely my favorite for today. Yeah, there goes Bitcoin. It's making the lower. It makes sense that it's doing that, to be honest with you. Zcash, I was also looking at for a short this morning. Unfortunately, it was too low on the range. Up here, I like the short at 541. Down here, I don't. It would have been a chase. Maybe tomorrow, depending on what it does today. If it doesn't get nuked today. You can see where I was looking for that entry up here around 5. Well, here, I'll tell you exactly what price. 518. So, yeah, I mean, it would have still been a chase at that point. But I did like it lower. That would have been a beautiful entry. Once again, another trap, another big fat close above resistance, and then it rolled over. It's like, see this happening over and over again, time and time and time again. XMR rolling over too. Jeez, this thing has been volatile as of late. Yeah, S&P rolling a little bit too. But this is an issue. Like I said, if this ends up rolling over, it's going to put more weakness on the dollar. So kind of need silver to fill me. And then SpaceX has pulled back kind of brutally here. SpaceX is very volatile. It's in the midst of a short squeeze. I don't see any other entries that I like on it. I mean, clearly that would have been the scalp as it moved up 10%. And then you would just be riding it. Getting long for long-term holds at 200, I think, is a little bit risky. It would have just been the scalp. Is your, fresh all-time highs up here. And this is looking at the perps. He did make fresh all-time highs. That's not great. It could still continue, though. It could definitely continue. This is a big-ass daily candle. It's bigger than you got on Friday, and Friday's when it opened. Insanity. A lot of people are trading this. Lots and lots of people. Big old, oh, that wasn't a daily, sorry, that was a weekly candle. Big move higher. It's retracing. We just got triggered on our silver short. Right there. What happened? Okay, can you explain that to me, bro? I got filled on the full position size because Kind of wondering what happened. You guys saw that it said I would make $307. Yeah, this is just, it'll be gone. I got filled on the full size position, so I mean, what? They took $60 in fees? What just happened? Yeah, see, that's a lie right there. They're saying I didn't get charged any funding fees or any transaction fees. But yet their calculator said specifically I would get paid $307 if I took a fill there. So where did that $60 go? And I didn't look at where my P&L was before I put the entry on, so there's no way I'm going to even know. But it's fine. I ain't worried about it, right? I'm not worried about it. I'm positioned nicely. If it wants to continue lower, I'll throw the stop on there for the rest of the position and then just let it ride. As long as I'm being paid the funding rates, which even though there's 0 fees on it right now, the funding rate you will still get paid or have to pay if this gets negative. But right now we're being paid to hold the short. There's no reason to close this thing. Just set a stop right above your entry and forget about it. And then if we get a larger breakdown move, if we get a macro breakout on the dollar tomorrow or the next day or next week or whatever, right? Then we will be positioned nicely for another potential full-size expansion back down into the 60s. Now, I'm not anticipating that's what's going to happen. I'm just simply stating that if it plays out to the point to where the Fed is not going to cut interest rates and they're going to hike potentially, then silver probably does revisit the lows on the back of a strong dollar. Because I assume that would make the dollar extremely bullish if they were going to hike. But it didn't for the yen, so I don't know, right? I'm not a macro analyst. I can look at rollover rates and technical analysis and give you what I think is going to happen from just sheer experience, but that's all I can do. You know what I mean? I can't predict the future, or even like last week I was completely bumfuzzled that the dollar did not break out. I almost knew it was going to break out. I was so long the dollar 2 weeks ago that when it did not break out, I was like, what? Absolutely bumfuzzled. Like I said, though, that it's big resistance. Monthly resistance is always big resistance. But the clear breakout point is right here. It's going to be Q4's highs. I know there's higher highs here, but I'm looking at it in terms of a range. You know what I mean? Looking at the range. There's wicks up in there, but there was no continuation. It got above it and immediately fell. So this is the point that it has to beat. It has to be able to get above this line and continue for you to say that there is a legitimate breakout. And then 104.41 is the next upside target on this thing. And I mean, there's only 14 days left on this candle. Look at what you got going on here. You got a bullish engulfing. Now, to be fair, you didn't get a close above that high, so that is important. But it's still a bullish engulfing candle. And this quarter spent all quarter literally just pulling back to support and is being bought up. So it does look like this thing is getting ready to make a run for it up. It really does. Things are looking rough. I would much rather see dollar weakness. So what happened to the music? There's no way that I've depleted the watch list. No, it's stopped there. Oh, it's still playing. I can barely hear it. I hear it now. Yeah, insanity. I don't want to see dollar strength. I want to see dollar weakness. Dollar weakness would be better for Bitcoin. And obviously, I want to see Bitcoin be bullish because more people make money when Bitcoin is bullish. There's a lot of people out there who are not traders. They're only investors. They only hold longs. And for those people, obviously, I would love it for Bitcoin to be bullish for them. I can make money regardless of what Bitcoin's doing. So it's not me that I'm concerned about. It's them. Those people. So yeah, I would love it to be really bullish. And I hold a significant portion of my own wealth in Bitcoin. So it's not for me, it's for my kids. I have enough money. I don't see that I could spend the money that I have currently. Not living the life I live. Now, I could spend it if I start buying mansions and Lambos and stupid shit, but as long as I live the way I'm living now, I'll never spend the money I have. So my kids are going to get the Bitcoin money and whatever money is in all of the trading accounts in the future. So really, that's all. That's all I'm doing. I love this shit. I love it. It's to me, it's just amazing that I can sit here in my house, in my office, and just click a mouse and watch money roll in. Fantastic. So I keep doing it. I mean, why not? Trump's a billionaire and he's still trading. He'll never spend his money. Oh, he's not got much time left. And he's still making money. Insanity. Our government is just insane. Politics is a joke. The founders are rolling in their graves, man. But yeah, it looks like it wants to continue to go up. I think as long as it continues to look like this, that's how I have to position. It is clearly trending up. I mean, clearly. Bam. There you go. So, yeah, I would love to see it roll over. So, but it's gonna be the Fed. If it rolls over, it's gonna have to be because of the Fed. At this point, if they don't, I don't see how the dollar could roll over. I just don't see it. There's no way I'm going to position for dollar shorts right now with the current interest rate spread. No way. I can't do it. That isn't the interest rate spreads. Here are the interest rate spreads. They are bad, man. As long as the dollar has this much of an interest rate spread, then it's still that all of this can be captured. That's what we're looking to capture on rollover. That's the carry trade. The carry trade drives price action because it's free money. It's no different than putting it in a money market fund. Taking your money in the bank and putting it in a money market fund. You're generating a 4% annual yield. Well, it's the same thing. If you put on a long USD JPY, you're generating an annual yield. You know what I mean? It's the same thing. Yeah, so it makes it a difficult short. And the BOJ has not intervened. We can look at that and see. I thought that they did. I thought I heard someone say that they checked it and they did. Well, I don't have the chart. Let me get Grok here. dollar reserves. Not reserves. All right, let me see. Let's see if he can figure out what I'm trying to ask for, because I'm too dumb today to figure it out myself. This is it. Yep, this is it. Japan intervention right here. The last time they intervened, they sold US dollars back in July of 2024. And they sold a big chunk of them. So we can go look in July 2024 right here. So this is literally the last time they intervened. And you can see what happened to this damn chart. It got shellacked. Shellacked. So they have not intervened since then. It's going to take their intervention and the Fed to cut interest rates to get this chart back into normalcy. This is insanity. We did want to get long this because of that back there. We didn't get the best entries. It was very volatile and crazy. But yeah, I mean, insanity. So retail is continuing to short this, not realizing that they're the only ones that's doing it. Like, it makes sense to do it around big news events potentially, but only if you're scalping. It doesn't make sense to continue to look for shorts and hope, because you only get 2 or 3 days of continuation before it's right back up again. 4 days there. You had 4 days of continuation, and it was right back up again. Here you only got 1 day down. 1 day down. 1 day down. 1 day. 1 day. 1 day. 1 day. 1 day. You see the trend? It's to buy it. when it sells off for 1 day, buy it. Not me, though, because I know the BOJ intervened up here at 160 before. I think they might again. They haven't yet. So I have tried to short it a couple times when I see volatility show up on it, thinking that maybe they are intervening. And those trades have all been stopped out. So it's not working. And it's definitely not working to hold them for a long time. If it's not worth holding for a long time to the short side, you're going to be hard pressed to get this to roll over. We need something. And that's the chart that's keeping this thing up. That's why this is up. In this very tight range. So euro dollar is chopped up. Pound dollar is chopped up. Like, it's insanity in the Forex world right now. We need a move. We need a move. Some kind of move. Out of this range, please. Up or down. Doesn't really matter. Down would be better for Bitcoin longs, but up's fine too. We can still make money. If you're following my channel, hopefully you're learning that you can manage your own money. Obviously, I am not a rocket scientist, and I was able to figure it out. You should be able to figure it out as well. Now, it takes discipline and risk management and all those things. That is where a lot of people fail. They try to get rich. You will get rich, just not today or tomorrow or the next day, but it will happen over time. And not long either. Like, it doesn't take long. Once you really get it, it happens pretty damn quick. Because most of these strategies can be sized up. Like, you saw me make $300. Well, not $300, but $242 today. That could have just as easily been $3,000 or $30,000. Just as easy. right? So you can, yeah, I mean, the amount of money that you can make is it's infinity. I'm not doing anything special. I'm just making sure that my losers are smaller. That's all. Let's read some of these comments real quick. Question for you. What? Oh, never mind. I read that one. How tightly are they correlated? We've already went over that with the correlation coefficient indicator. More difficult. Yes, I agree. Okay, thanks. I was asking. Okay, that helps. Thanks. I'm focused on small time frame scalps 90% of the time. Yeah, see, in that scenario, a correlation coefficient's not going to really matter to you a whole lot. Now, what it can do is it can give you a basis or a bias, right? It can give you a directional bias. So as long as there's an inverse correlation, if the dollar is bullish, which right now, so like, okay, so subjectivity comes into analyzing price for a lot of people because a lot of people use a lot of different things to analyze trend. If you analyze trend objectively, you will do better, in my opinion, because that's what I do. I don't need to, for instance, is the dollar up or down here? Objectively, it is bullish, right? Because it is up on the year. Therefore, it is bullish. It is a bullish yearly candle. So objectively speaking, the dollar is up. Okay? Now, if you're looking at moving averages, then moving averages are going to tell you two different things. For instance, on the daily time frame, you have completely flipped the trend back to up. However, on the weekly time frame, the trend is still obviously down. Right? So since you're a near-term trader, a near-term scalper, the near term should be more prevalent for you. A long-term trader, a trader that's looking for years or potentially months to years, position traders, they're not looking at technicals. They're not. They don't care. But for you, you do. So the daily says you should be looking for longs, not shorts on the dollar. You are above the 21. The 21 is above the 200. That's it. So objectively speaking, since there is such a high or such a strong inverse correlation to silver and gold right now, hypothetically, you should be looking for shorts at prior day highs or at prior week highs. Those are the only areas for you to even put risk on. You shouldn't even be thinking about putting risk on anywhere else on silver or gold. Period. End of story. It is literally that simple. So today we got silver. Knowing all of that info I just said, dollar is objectively up on the year. Dollar is objectively bullish on the daily time frame because it is above the 21 exponential moving average and the 21 is above the 200. Therefore, I need to be short. Where? At yesterday's high. Bam. Bam. Done. Take your money and move on to tomorrow. Now, the way that I mitigate risk, I always take 70 or 75% of the position off, because essentially what I'm doing is I took the risk, so I want to make sure I get my money back, plus I want to be paid for that trade. Once I've done that, the rest is the house's money. It's the casino's money. I don't care what happens to it. Not my money. I don't care. It can grow. It can die. Don't matter. I am literally taking all of the risk out of the market. And then those positions you can just let run until they get stopped out or until they reach a size that for you, it's making you say to yourself, I think I should close some of this. This has gotten big again. Okay, close some of it. Close the whole thing. It doesn't matter, right? It literally takes all the worry, all of the everything out of trading, out of finance. It's just that easy. And that edge will always be there. Even if AIs are trading the markets nonstop, it doesn't matter. It's a trend following strategy. As long as markets produce trends, you will be able to identify those trends. You will be able to look for the best places to put risk in the market. Wham, bam, thank you, ma'am. Even if AIs are doing it. AIs were built by people. People control the markets. It's emotion. It's greed. It's all that, right? Fear, all of that stuff. That's what makes these patterns repeatable constantly. It's the same thing over and over and over again. You got people trying to call reversals where they shouldn't be, and those are the people giving everybody else free money. Since retail is constantly trying to call market tops and market bottoms because they have some super duper good strategy that some guy who isn't even profitable on the internet sold them for, I don't know, thousands of dollars. Now they want to go out and do that. And I'm glad they do, because it gives me the ability to take their money. If they want to do it, if they want to give me their money, I will take it. You don't have to do that anymore, because I'm not charging you anything, and I'm showing you week after week, day after day, month over month. It is absolutely achievable and consistently achievable. I continuously make withdrawals. I haven't deposited money in a crypto account in a very, very long time. And I am constantly making withdrawals. It is very much repeatable. So yeah, I mean, I still like it long term, because until the structure changes. So once structure changes, then obviously I have to change. This is why I have a price is king mentality. So like I said that the BO or the USD JPY would most likely start to struggle here, right? And look, it is. So that's showing that stuff like that is just experience. So the more time you have in the markets, the better you will get at identifying stuff like that. You will see these things happen over and over and over again. And it just becomes a lot easier for you. Just so like I can look at a chart and tell within 5 minutes if I want to trade it or not. Some people think that that's cocky or arrogant or whatever, but it isn't. It's just, it's literally, I've just been doing it for so long, I can see if it's a trade or not. But anyways, this is where you want to be taking profits, right? You don't want to be getting in a new trade here, because that would make you against the trend. USD is strong, so you don't want to short USD here. But it is definitely a profit taking place because it's the prior day's high. So as long as the dollar is trading above 160, 398, it is upside continuation. And good for us, because we currently have positions for that, right? So we don't have to do anything but take profits here. Everybody else that's trying to get in the trade that they missed or got stopped out of, they're putting on trades right now. Right? That's that. It just keeps happening over and over and over again. Trend following. Now, I do a lot of different strategies. Sometimes I do reversion strategies and, liquidation strategies and things like that. But the main strategy that I want all of my YouTube subscribers and people, even if you're not subscribed, if you're just listening to my voice right now, I want all of you to understand trends exist in these markets, and you should be trading with them, not against them, right? Don't try to call tops. Don't try to call bottoms. Just look at the indicators for what they truly are. The only indicators you need are moving averages and an RSI. That's it. It's a momentum oscillator. It's not, more or less, it's not going to be like, you're not going to be worried about overbought and oversold. Generally, you're going to be on the side of overbought or oversold, not looking for overbought or oversold to then enter a trade. You want to be getting out of a position once you're getting to those extremes. That's where all the volatility is going to be, at overbought or at oversold. So you want to be scaling out once the volatility shows up. Momentum scalpers look for that volatility. Occasionally we do too, but we don't love that style of trading. There's no consistency in it. It's literally betting. It's just gambling. Oh, it's oversold? Let's short it. That's it. It's a gamble. The momentum is clearly moving against you if it's overbought and you're trying to short it. Order flow is clearly against you. People do it in the crypto market, I think, because most cryptos pump and dump, right? So they're looking for everyone to dump. Every time you get a small pump, they expect to dump. And it could be weeks before that happens. Like, why is it going to happen on that day? You know what I mean? It could be weeks. It could take a month. That one crypto, that last one, that thing ruined it for me. Looking for those massively overbought cryptos to try to short, I probably won't ever do it again. That thing was at $99.99 on the daily RSI. 100 is max. It does not go higher. And that was at $2. I woke up and it was at $8 the next day. And then it went on literally all week long. It continued to just go up. I think it topped out at like $30 or $40. Like, holy shit, dude. Obviously that's insanity to try to short that. So many people lost so much money on that thing. There were hundreds of millions in the volumes. It was insane. Yeah, I tried it twice. I'm done. Let everybody else play with this stupid thing. Yeah. And you got people on Twitter posting, this is manipulation, blah, 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 blah. Hey, it's your fault if you lost money on it. What are you bitching about? You're the one that decided to bet the farm on a manipulated asset. You're just mad that you lost money, so now you want someone to get hung. It's so stupid. It's like, what are you talking about? It's manipulated. No shit. So stay out of it. Trade the assets where you have an edge. That's what I like to do. That's where the consistency is. That's where the money is. Where you have an edge. So, yeah, it's starting to get a little bit of momentum here, and we kind of anticipated it. We weren't looking to put a short on here or anything. It's just we know once price gets here, it is continuing or not. And tomorrow is a big news event. So chances are the rest of the day, this thing just stays in this range. Most likely, it's just going to do this for the rest of the day, right? There's nothing, absolutely nothing. We'll see tomorrow's the big day. So we probably won't go live in the morning because I expect a lot of sideways chop for everything. Because the dollar is leading these things, obviously. I expect Bitcoin to be here or here or here by the 2 o'clock tomorrow. That's it. It's going to be in that range somewhere, and then we'll look to position ourselves for a scalp tomorrow as well, because you can consistently make $300 a day. It doesn't happen every day, but it can. And we'll see what we can do. I really don't expect much out of it. I mean, you took out yesterday's low. So that's where the biggest part of liquidity in today's range was at yesterday's high or at yesterday's low. Now that you've taken that out, I expect it probably stays in this range, closes as a big fat doji. Not much else to do today. Now on SpaceX, that's different. SpaceX is clearly extremely volatile and momentous right now. There is no technical edge on this. There was a technical edge on it this morning, or at least I felt like there was, but there isn't now. Right now, it's just mayhem and volume and people making bets. But this morning, it was a clear pullback zone. That's where we wanted to see it find support. It did. It exploded to the upside, 10%. Now it's pulling back. It could find support, but I mean, it is still volatile. We're going into the 11 a.m., so we're going to get a new hourly soon. This is extremely wide range to be looking for entries. Yeah, I mean, it's brutal. The only place to even look for anything would be there and there. And then there's nothing to do. Like, if it's trading under this, you got to leave it alone because it could be coming to 189. That's the next where all the stops are. So if it's under this, it's heading here. So leave it alone. I don't even know if it'll even get back down there. I'm just simply saying that's your trading range. And it's a big one. Make sure you're mitigating your risk if you're trading it. It is fun to trade these things, and there is money to be made on them. Occasionally. When there's a clear and obvious. Yeah, right now it's not clear and obvious. I would say that's probably a retracement. You can definitely fib it, but I mean, I don't know how much edge looking at a fib's going to have. Because like I said, down here's where all the liquidity is. Yeah, it's very difficult to trade stuff like this. Just make sure you're mitigating risk. And then we'll see what the Fed has to say. They're going to be the ones that essentially, this is the most important Fed decision that I've seen in a long time, because it's essentially going to drive the second half of the year's trade. You literally have so much money on the sidelines right now, just waiting to see what the Fed's plan is, because everything is so jacked up. Now that Trump went to Iran and did that stuff over there, you've got guys that have been handling money, managing money for 20, 30 years that has no clue what to do with it yet right now. Now, obviously, there's AI's hype and all that, but still, you can't put all your eggs in the AI basket. There's a lot of eggs that are on the sidelines right now. Fed's, this meeting is huge. It is absolutely monstrous. It's monstrous for me, too. Like I said, I have a nice wad that I need to decide what I'm going to do with. I did have AI give me a less volatile way to generate a bigger yield than 4%, but nothing crazy like 11 or 20. Obviously, everybody wants the bigger yields, but the higher the yield, the more volatile or the more risky the position is. But anyways, I did have him build me a dividend watch list, and I went over the data, we checked it out, and let me pull it up real quick. I made it under Dividend Kings. These assets are not Dividend Kings. Okay, I just wrote that as the watch list, but these are all dividend paying stocks. MOVZ, VICIO, GIS, KO. GIS I would probably leave alone for right now. This is General Mills. There's some problems going on with this thing right now. So clearly this isn't somewhere that I want to put hundreds of thousands of dollars just yet. So maybe keep this one off the watch list. But we split it up, and I didn't do it all in one. I did, 20% here, 10% there, 5% there. But anyways, I split it up, these top four right here for 2025 with $350,000. And essentially it generated 22 to 28 grand, right? It wasn't an exact number. We had to round a little bit, but so it was a nice return on capital, almost 10%. That's on 350. If you can generate, just in dividends, it made between 21 and 28K. So anywhere between 7 and 8 to 9%. That's what you generated. And the premium, the principal, the original 350K that was invested went up to 414. So not a big gain on the principal, but still safe. You could have slept good every night knowing that that's where your money was. And that's these top four right here. VICI is the bigger one. Like, it pays a bigger dividend than all of the rest. So but it's more volatile in terms of price fluctuations. But MO was the big winner. As you can see, for 2024, it's been going straight up. So that one was the big winner. That's where a lot of the equity growth came from. But yeah, that's for anybody that has money in a money market fund right now and just doesn't quite know what to do. There you go. There you go. You can do something like that. There are other. Coca-Cola is a good dividend payer. It's also a very safe company. As you can see, long term, it is still trending higher. It looks really good. Now, obviously, if we go into a bear market like everybody's calling for, it's so dumb, but every year everybody's calling for a bear market. So maybe put a little bit of capital in those high growth, high risk AI plays. The majority of your money, the money that you have in a money market fund, if inflation stays negative, or if the real rate stays negative, your 4% is losing money. So you'll have to figure out something to do with that. That's what I'm going to do with it, most likely. If Bitcoin stays under Strategy's cost basis, I would like to deploy a sizable amount of money to STRC, as it is very attractive. I'm risk averse. And for someone that doesn't like a whole lot of risk, I already have a lot of risk. Like what I'm doing every single day with these, with risk capital, day trading it, like that is the riskiest shit you can do. One person asked me there, why don't you just do this? I don't want more risk. I have enough linear money off of risk capital that I have dollars into this risk capital. I'm not trying to grow it that fast. I just got to do something with it. It's annoying almost. But it's easy to say that stuff when you don't have money, right? Just risk it all, throw it all on black. Sure. Yeah, but when you do, you get my point. And I know there are some of you out there that do have money that are seriously like, what now? Well, that now, right? That now. All right, let's look at that real quick, just so you can see what I'm talking about, and then we'll wrap this up. I will read all the questions and everything before we wrap it up. I'm not bouncing. But just give me a second. So US 03 month year. Yeah, that minus US inflation rate year over year. And then just hit enter. Put that on a line chart because it's going to look dumb as candles. And then obviously kill the MAs we don't need. So right there is your real rate. So as long as this is positive, your money market is getting paid. You are outpacing inflation. When this is negative, it literally means you are no longer outpacing inflation with your 4%. That's what this is. Right now, people with money in a money market fund are losing money. Now, oil is a big, big reason why the CPI went up. Oil affects CPI. Every $10 barrel, every $10 a barrel price fluctuation on crude oil futures moves the CPI by 0.2%. All right? So if you get a $50 spike in oil, you're going to see a 10-point move in CPI. So if it was 3.0, you get a $50 spike in oil, it's going to 4.0. You see what I'm saying? So if oil continues to come down, that will bring CPI back down. CPI is the U.S. inflation rate. So that's essentially what I've minused here against the 3-month, which is just the near-term Fed rate. But U.S. inflation, or CPI, is right now sitting at 4.2%. So if oil continues to decrease, then this will come down again, thus bringing the real rate back into positive territory. If that happens, there's no reason to move the money out of money market funds. But if inflation stays elevated, or if the real rate stays negative for month over month over month, then you're going to have to make a decision on what you want to do with it. Just as I will have to. Right? But we don't want to move a shitload of money because we got 2 months of a negative print. We want to be, data dependent, just like the Fed. We don't want to freak out just because of slight volatilities. So we'll be fine. I'll let you know what I'm doing. Once I hear from the Fed, once I give the market a week or so to digest what the Fed says, then we'll go into it and we'll make a decision on what to do with the money market money. For some of you, I know it does not matter because you don't have that much money, you don't care. But others do, right? Others do. So anyways, that's what we'll figure out. I think it's still very risky. Now, if you hear Michael, here, let's just do this because I don't want you to take my word for it. I'll let him speak for himself. Let me see if I can find it. Give me a second. Let's see. It was yesterday. So yesterday morning. I watch way too much YouTube. Okay, right here. This is perfect.
Coin has $1 trillion.
Shush. I need you over here. Just bear with me here. Let me see where we are. We don't want that. We don't want that. We don't want that. Right here. So I'll let him speak for himself real quick.
And now it's important to talk about money because we use the word money a lot. What is dominant monetary network and how do I view
This
it?
is the best
point I want to make
video.
about money.
We're not going to watch the whole video. We're just going to watch this little snippet right here because it's important.
And the word money is your perspective, and your relative perspective colors how you interpret that word. So I'm a big fan of Murray Rothbard. I read a lot of Austrian economics. I've read 10,000 pages of Murray Rothbard, all of his economic histories and all of his histories of the American colonies conceived in liberty. And now if we take a snapshot of the network today, we've got a market cap about 1.2 trillion, but the realized value is about 1.1 trillion. It's a liquid asset. It's traded on 1,000 exchanges. It's backed by 16 gigawatts of power, 940 exahash. And global consensus has formed.
There's a specific part that I am looking for. We all know what digital capital is. We all know that digital capital is new, but there's a a part through here where he actually shows you the stats. That's what I'm looking for. I'm almost positive this is the video. It is a keynote speak event. We just gotta find it. Okay, right through here. All right.
Money behind it to do it. So let's start with the first dimension. Capital comes in different assets. You've got commodities, you've got equities, you've got credit instruments, you've got derivatives, you've got real estate, you've got money, and here I'm referring to cash equivalents and fiat, and you've got tokens.
Yeah,
if you look at the stratification, what you see is a lot of the capital sits in the bucket of real estate, credit,
money
equity,
markets,
and money instruments. Zero volatility currencies in euros and dollars, et cetera. And so it's not enough for us just to attract all the money that's in gold or silver or commodities.
Yeah,
it's just not enough. We have to actually get them or using it as collateral or payments. So when you look at how the capital is stratified by use case, you can see store of value and capital appreciation are big. That's a good thing because Bitcoin meets those two natively. But then a lot of people...
Basically, since they've had STR, I can't find it, and I'm not going to continue to listen if I can't find what I'm looking for, but since they've done it, Bitcoin has declined significantly. Bitcoin's off 50%. So obviously, if you got all your money tied up in Bitcoin, you've lost 50% of your money. That really sucks if you're talking about big chunks of cash, right? But if you had the money in something like STRC in the same time and didn't sell, you've literally generated a nice return, and your principal is sitting safely. You can sell safely at around what you got in at. So, but right now, obviously, the volatility is huge. There's a $10 fluctuation, and under 90 is the ultimate risk for STRC. So what I want to see, obviously, moving on, before I would even think about moving a large amount of capital out of a safe fund into a very not safe fund, is some support. I need Bitcoin to at least be holding support, and that means on tests. So daily 50 would be fantastic if it could hold it. So up here, Bitcoin was testing the daily 50. That is still a very fast indicator, but then it lost it. So this right here is not what I want to see if I'm looking to put my capital into something like one of his preferreds or STRC. STRC is the only preferred I would even think about moving a lot of capital into, because the others are just too risky. Because you're not only looking for a yield with those other products, you're also looking for potential gains on the principal. So that's what they do. They pay a smaller yield, but your capital itself potentially grows faster because they actually move up and down with Bitcoin's price. STRK, STRD, there's like 2 or 3 of them. Let me see right here. Oh, not that. Right here. So you got STRK. All right, this actually moves up and down. It's sitting at $66 right now, but the highs are at 130. Same scenario. If you put your 500K in this thing at 124, you have lost half of it. So good job. You managed to lose half of your life savings. Not good, right? These are too volatile. They move too much. STRC right now, 90 to 100. That's supposed to be the floor. That's supposed to be the ceiling. So obviously getting in lower would be better. But if you lose 90, it could cascade. It could create this volatile move that even if you didn't want to, right? Your emotions would be so jacked up if you watch your life savings get knocked out by like 80% in one day. You're probably going to hit the sell button. I mean, it would be hard for me not to do it, right? Because you just see it going away, going away, going away, going away, going away. And your heart's racing. And I get it. I've been there. So I need Bitcoin to build in an obvious support floor. If it can hold that, then maybe a little bit of money can go in to STRC. If you have a very high risk tolerance, I would tell you just do what you want, right? Bitcoin would be the better way, as Bitcoin is the asset that moves, that's generating the yields and the price fluctuations on all these other products. So you might as well just put it in Bitcoin. But I have enough in Bitcoin. So I got to figure out something to do with the rest. And I would love to put it in something that benefits Bitcoin and also generate a yield on. But it ain't safe. It isn't safe. It is. They're trying to strip the vol out. Now, once you get the Goldman ETF, there's a Goldman Sachs ETF that's coming out that's going to also be a vol stripper. It's going to be a call selling strategy. So essentially, they're looking to generate a month-over-month return via selling premium that will make it more difficult for Bitcoin to break out. But ultimately, when Bitcoin does break out, the breakouts will be more volatile because they will have to rotate those. They will have to essentially move that money, right? So they're going to capture the upside. You're going to capture the sideways. Essentially, what the ETF is designed for. iBit just brought out, or not iBit, but iShares is also bringing out one of those as well. So you got more and more companies building products in and around Bitcoin to suppress the volatility. Volatility suppression is a good thing for big money to come into. So it ain't just Michael Saylor that's building products in and on top of Bitcoin to essentially knock off the volatility of Bitcoin. So Bitcoin will become safer in the future. Right now, it is still very, very volatile, though. I mean, it's down 50%. That's volatile. Very volatile. So long term, I think Bitcoin's going to do great. And like I said, the more money that comes into it, the better it will be. It's creating a supply shock. So, if those money market funds start to come into Bitcoin or Bitcoin products, that ultimately could cause a bull market like of old, like what Bitcoin used to do, like pre-2020, right? When it went from, you know what I'm talking about, just massive moves, massive rallies. Even the 2020 rally was phenomenal, right? But this rally over here was insanity. Yeah, something like that could happen again because of a supply shock and because of all these other firms building things on this as well. But it's also a risk, obviously. So as long as Bitcoin is under their cost basis, I do not feel safe doing that. All right, with that, let me answer some of these questions, and then we'll wrap this baby up as we've already made the money for today. There really ain't nothing else to do in the market. I think the market's going to be very sideways for the rest of the day. But we'll see. That helps. Thanks. Okay, read that. So you do not consider that a 4-hour structure flip on silver. Wait. So you do not consider that a 4-hour structure flip on silver? No, it is. It is. Yes. You've taken out the prior 4-hour low. Well, let me pull this XAG USDT. It is, but does it trump the daily chart? No. Yes. Could one ultimately look for like a 4-hour supply candle short? Yeah, you could. But in terms of the daily range, you know, it's a doji, right? You've already liquidated the prior day's lows. So in terms of liquidity, which is what price is constantly looking for, the next area of liquidity is all the way down there. So until silver gets under this day's midpoint. You have done nothing. This is just a pullback. All right? That's it. That's all it is. It's a pullback. It's heading in the right direction, but it's a nothing burger in terms of what it's done. It can trade sideways for the rest of the day going into tomorrow. It needs to break down to head to this liquidity, for a larger, lower move. But there's no point in even looking for that if it can't even get under this. And it hasn't even got back there. It's not that it can't get under it. It still hasn't even gotten back there. So this is your daily low. So in terms of today's range, you're testing the open. Like, that's it. It's a doji. So I think we're positioned correctly for it. I wouldn't be putting on risk now. So when I'm day trading, I'm looking to capitalize on the New York session volume, right? Because the way that I'm looking at the way daily candles are made is big volumes come in and then price generally will expand, right? So I'm trying to capitalize on all of that volume, and I want to get positioned ahead of it before the volume happens. And I want my bias and everything to be right always, but it isn't. But still, you get what I'm saying. So that way, when the volume comes in, I get that price move, or I get the move in the direction, takes my target, and I'm out. Boom. That's happened. Could it continue? Yeah, but I don't have any indicator. There's nothing that I can look at that's going to tell me what it's going to do. Right? So I don't know what it's going to do. I didn't know what it was going to do to begin with, but where my entry was versus where my take profit was a really good place. That's generally what I'm trying to do every day. What I did today, repeat that. That's what I'm doing. Just repeat the same process over and over again. Sometimes it works, sometimes it doesn't. So on the days that it doesn't, I have to make sure I'm losing less. But there's nothing that I'm looking at here in terms of the technicals or the chart that's like, oh yeah, this is going much lower. No, nothing. It just bounced off of the lows. So the very near term is more bullish than bearish. You have good sell side deltas here on this product. So there is potential for downside continuation, right? The sellers are more aggressive now. The buyers were more aggressive today, but now the sellers are. So at least you've got that going for you. The weekly open is up here, but you haven't made a fresh weekly low yet. If you look at the weekly range in terms of what has it done this week, nothing. Here's your weekly open. You set a high, then you went down and set a low. You set a higher high and a higher low, then another higher high. After you did that, price came down, it took out the lows, and it took out the lows good. And so far it has bounced. It bounced back above the weekly open. So this is just chopping traders that think that they can predict what price will do up. That's all that this is doing. Because strategies and things are just that. They're strategies. There's something, if price does this, then I can do that. That's all it is. It's not guaranteed to make price do anything. So right now, it made a lower high, but it still has not made that fresh lower low yet. So right now, we can't say that silver is in a trend. It is still sideways. It is still sideways. We can say that since you made that last weekly lower low, you have made a lower high. And you did get an expansion away from that lower high. So it does look okay for more downside, but that's all. That's all I can say about it. It looks okay. As long as it stays under the weekly open, I definitely would like to be a seller, but only if the dollar is also looking like it wants to continue to go up. Because if the dollar breaks down under the 21 and then it becomes weak again, then I don't know. Then I definitely don't want to be short silver. I'm not looking for like insanity prices. I'm not looking for silver to return to like 40 or anything like that. I was just looking for a downside scalp. And for the specific strategies that I deploy for scalping, sorry, it's a lot to get words out of my head nowadays for whatever reason, but I need to continue to do what I've been doing. I'm essentially I'm trading the ranges. That's it. That's all I'm doing. I'm trading the ranges. This up here was because I assumed this was going to be a trap and it was going to head lower, and I took profits. So I was looking for a move from here to here, and I got that. I'm not going to close the position because it's under the weekly open and threatening new lows. And because the sellers are more aggressive, hypothetically, one could try that trade. But it's not one that I would do. I might do it tomorrow, given that we have the same setup, same structure, same everything. But for today, it's already done it. Does that make sense? It's already done what I was looking for. I have no edge outside of what I'm looking for. I can't predict what price will do. So outside of if it's going to do what I'm looking for, if it works, yay. If it doesn't, oh well. We'll try again later. That's how it works. So yeah, it still looks fine. It could go lower. But like I said, dollar has, well, the USD JPY specifically is actually giving you upside trend continuation right now. So if you are looking to, like, if you miss the silver trade and you think that you want to try it today and you're willing to put the risk on, go for it. As long as the dollar is trading above this price, you have upside continuation. When dollar falls back under this white line, you're back in yesterday's range. So you no longer have continuation. If the dollar falls back in here, silver is likely going to stay inside of its range as well. So if the dollar continues to expand in a large way to the upside today, then yes, I figure silver probably could end up getting down into these areas, maybe, right? It's a big move. You already moved almost 2.5%. So, I mean, if you're looking for that much again, you don't have any more volume coming into the market. Not much. The majority of it's already been down. The New York session is when volume comes in and then fades out. You do have people that trade all day, every day. So, I mean, those people will be there. But for the expansion from big volumes, that's happened. Boom. There it was. That's the edge. There is no more edge on it. It's under the VWAP. That's an edge. Sellers are aggressive. That's an edge. Where you put your risk on could also be an edge. You've got 27 minutes left on this close. For this to be a legit supply candle, this must close under the low. I would like it to close down here. But you've got support right here. This is also a higher low. So, I mean, it's anybody's bet still what it does. Anybody's game. This thing could absolutely find support and make a fresh day high. I don't know what it's going to do. That's not where I make my money, not anticipating it, what it's going to do. There are edges. I exploit those edges. But yeah, I mean, it's kind of broken the structure. Each minute that goes by, the chances are less likely that you're going to see a bullish engulfing candle. So, I mean, the probabilities are good that structure has been broken to the upside. Now, I just don't know if you're going to see any more trend continuation or not. Like, that's the stuff I can't predict. But yeah, week open is there, so you're bearish on the week. As long as it can stay under that, I would be more bearish on it than bullish. Hopefully you understand. I understand that you guys are trying to learn. It's a lot to learn too, but eventually it'll sink in and you'll be like, oh. And then once that happens, it's on like Donkey Kong for you. Because that's what happened to me. I was like, oh, I see. So it isn't about guessing which way the market's going to go. Got it. Yeah, I just let price tell me what it's literally doing and then try to scalp off little bits of price action on the way. Like, that's it. I want to ride it for the momentum. Sometimes it works, sometimes it doesn't. Yeah. Keep an eye on the dollar. You're definitely going to want to see trend continuation. But I'm seeing mixed signals out there. Like, Euro's also up. Euro should be heading lower. The DXY is like down. So don't look at this. This would give you a mixed signal, right? Dollar's down. Silver should be up. Nah, not really. Not really. The very near term is up, not down. You made a higher weekly high here today. So this is just a pullback. This isn't anything more than anything until you take out and continue under yesterday's low. As long as price is above yesterday's low, it hasn't done nothing. You see, it's done nothing. This could be looked at as a pullback. This would be a buying opportunity for dollar longs. I mean, if they are trying to take that opportunity right now, it would have been a better trade earlier today, but maybe not so much right now because the momentum has waned. All right, the momentum has waned, but over here is where you're seeing that strength. But only if it's above that white line. That's yesterday's high. Under that, you're range bound. And there is no edge in a range bound market for trend continuation. There are scalping edges like selling calls or selling puts and things like that, but we're not going to get in all that. There are a million different ways to do this stuff. It's just math. MSOS tested yearly open. What do you think? Okay, I don't know what it is, so let me just say that right off the bat. MSOS. It is the Advisor Share Pure US Cannabis ETF. So the weed stocks testing the yearly open. Well, it is doing that, but I mean, looking at where it came from to where it's at right now, yeah, it does not look great, my friend, right? I mean, yes, it is testing the yearly open, but the asset itself is not bullish. It is bearish. You're on the lows. The yearly open for this year just happens to be on the lows. So this is where you would definitely want to see the bull show back up again. I mean, so all the expansion that you did for June has been retraced. We typically don't want to see that. We want to see momentum continue. This could just be a retest. You are correct. So the only way that you could trade it would be to essentially put the risk on in anticipation of a bounce from here because of what it is. The level will make people do things. Not so much this one because it's under $5. If this was an asset that was like 150, 200, whatever, anything more than 5. And the reason I say that is because in America, money managers and financial advisors can't buy anything under $5. It's a penny stock. It trades OTC. It isn't a legitimate investment vehicle. Okay? So your Goldman Sachs and your BlackRocks, they're not buying this. Nobody's buying this except insiders and retail and a few other whoever's. But money, your trillions is billions isn't even in this probably. It is purely a speculation vehicle, not an investment vehicle. So with that being said, yeah, it's the yearly open. It could bounce. Let's look at it objectively. So it started the year off, set a high, made a low, was bearish for a long time. So something happened in March where buyers decided to come back in. I don't know why. I don't care. It doesn't matter. Buyers showed back up. You had demand. This could be looked at as positive. It could. But you don't want to see it lose the 50. You've got a support level down here at 440. If this thing loses 440, I would crinkle it up and throw it away. There's no edge on it under 440. None. There's not a technical edge. There's not a macro edge. There's not a fundamental edge. There's a zero edge under 440. So you could hypothetically put on some risk and then throw a stop out at like 424 or something, just to be like, if it loses that, I don't want to be in it. Good news, it's at 479 up here. So that's only a 30-cent decline. That's not major, as long as you're not going in with whatever, which if, I don't know what leverage you could even put on this, but as long as you're not super levered up and you don't own more than 1,000 shares, it won't be that volatile. Once you get up into those numbers, then even 10-cent moves become volatile. So, yeah, it could absolutely hold support here. Let's check it out on the weekly. Yeah, the weekly's above the 21. That must be happening before I can even think about buying an asset. That must be happening. You did get a legit support test of it, and you did make a higher high. Those are also pluses, but that has already happened. There's no guarantee that will continue to be the trend in the future. But I do like where your head's at. I do. You're right. It is potential support, and a big one. Because as long as you're above that price, it is up on the year. But right now it's testing that. So big decision to make for anybody that's looking to long this at 480. And it's their decision to make. I would stay far, far away from this. Very far away from it. I like to only invest in growth stocks that are trending up at least the last 10 years at a minimum. You know what I mean? This has only been trending up since 2025. So far so good, but it must continue that. You could even put a trend line on this. Like that. So, yeah, if you lose that, it's done. It's donezo's most likely. All right. But, yeah, we'll see what it does. Shit. You'll see what it does. Take a look at it. See what happens with it. Make sure your risk is mitigated for sure. It's amazing that Weeks pays you to hold silver positions. No, Weeks isn't paying me. The funding rate is. Weeks is not paying me a dime, period. The funding rate is. So that's the way the perps work. That's what makes them work. If there was no funding rate, then the asset wouldn't trade. That's how people. So like when you hear people blaming money market or market makers stopped me out, it's a load of crap. Market makers are looking for funding rates and spread fees and things like that. They're not looking for directionally biased bets. They will only get involved if they can make money. They can only make money if there's a funding rate. The funding rate is generated on the exchange. So, just there, you can, I'm not going to try to explain it. It would take me an hour to explain what the funding rate is and how it works. You can simply ask an AI bot and it will tell you. It will tell you. So, yeah, and that funding fee is generated based on the difference between the spot price and the futures price. The futures is up significantly higher than the spot price is, then the funding rate automatically flips to pay the sellers to try to get the futures price down to the spot price. I guess that's about the fastest way I can explain it. And then vice versa. If the futures price is lower than the spot price, then the funding rate will flip and adjust automatically to give that risk to the buyers, to pay the buyers. So it's essentially saying, come buy me so that way we can get the spot price back to par. And then your money or your market makers are essentially looking at the par price and then putting on strategies to extract that spread. So when I say spread, it can be the spread on the bid and ask. That is a spread. There is also a funding rate spread. Right now, the funding rate spread is paying sellers by 0.01%. So the spot price is at 0. So there is a spread there. That 10740 is the spread. And yes, every 8 hours, as long as volatility is low. Now, volatility also influences funding rates, and there are a lot of different metrics that influence the funding rate pricing. So yeah, if you see a crypto asset that's extremely volatile, like it's moved up 150% today, check this first before you ever put on a position. Because if it's up 200% and this funding rate is paying the longs, well, like 2% every hour, you'll lose money by shorting it. It's paying the longs. That means the sellers are paying that very expensive every hour. Occasionally, I will jump into those trades too. If there's a setup or a clear and obvious support line to try to generate that free money. But I always only do it with a small amount of money, right? Because I still have to risk the stop loss. But yeah, you can generate a couple $100 in a few hours just off of funding fees. But yeah, Weeks isn't paying it. So right now on silver specifically, Weeks is letting people trade it for free. They're charging you 0 fees. So you can get in and out of market orders if you want to for free. But you're still going to get charged the funding rates. If you're, I haven't been in it long enough to accumulate any funding rates yet today. I think it generated like $5 or something like that from yesterday, but it ended up getting stopped out. So yeah, it's not like the people that are making large money through funding are generally big positions using no leverage at all. They're just putting the money into the asset, and they're not going to do that with any real volatile asset either. Assets that move more than a couple percent per day, they're not going to be doing that. I don't really care about funding fees usually. Usually I'm a directionally biased trader. I need deltas to generate money, unless I'm trading options. And in that scenario, I'm usually a seller of options more than I am a buyer of options, because the strategies just are better for the sellers. They're more probable, depending on time frame and duration, depending on duration and delta and all that. But yeah, there are a lot of really good strategies that you can run selling option premium. You also got to know what you're doing, because you can also get wrecked just selling random options. Get killed. Verizon gives a 6%. It's really good and steady growth stock. Yeah, it does. It gives 6%. I think they have only raised 2. I don't think. Let's see. Let's ask Grok before I say anything, because I don't want to look stupid. Say one thing and then find out. Has Verizon ever decreased the dividend payment? Coca-Cola has never decreased. They have always raised. But I mean, that could change. Yep, there you go. Verizon has never decreased its dividend payment in modern history as a standalone company. They've been paying its quarterly dividend for 18 plus consecutive years. And it keeps going up, which is good news for dividend if you're getting in an investment for the dividend alone. Yep, it's a good, safe, slow-moving ticker, generally speaking. Verizon is, generally speaking, something like that you want to check out on a monthly. And there has been some volatility in it, right? But here lately, not much. So literally since December of we'll just call it January 2024, Verizon has spent very little time trading under $38.50. Very little time. That's an amazing thing to see as someone with a lot of money. It could in the future, but at least it hasn't for a while. And now it's starting to trend in the upward direction. So now buying shares of Verizon at prior monthly lows, not a bad idea. I don't want to buy it up here, but down here, yep. Next month, down here, yep. Yeah. Put that money to work. And I can put a stop out at $37.90, because if it breaks under that, something is wrong. It's a beautiful thing. Zero leverage, because I'm just trying to put a large amount of money to work to capture the dividend. If price wants to appreciate in the next 4 or 5 years as well, I'm all for that too, because that just means the principal goes up too, which is a good thing. But generating a dividend, if you have a lot of money, it is a good way to earn a cash flow positive money. Like it's not a lot, but we don't want it to be a lot. We don't want that much risk in that portfolio. We don't want much risk at all in that portfolio. That's for slow growth to generate a quarterly cash flow. Now, obviously, you got to pay taxes on that and things like that, but still, it's money coming in. So that's the money you want to use to pay off your bills with, like your electric and your food and your gasoline and cell phones and all that garbage. You don't want to spend your money to pay all that stuff. You want somebody else paying you, so that way you can take the money they give you and pay that stuff. Then your money never goes away. It only grows. That's how the billionaires do it. That's how rich people live. That's how poor people can live too, if they wanted to. They would just rather play the lottery. That's a tax on poor people, the lottery. I never play the lottery. It is literally a tax on poor. They are trying to milk you from every dime you got. You are almost guaranteed to not ever be better than break even if you pay the lottery. Are there one or two people that are lucky that don't fit inside that model who have probably made money playing the lottery? Of course there are. But for the majority, for the people that fall in that 68% region, like if you look at it as a barrel curve, everybody else sits right in here where they are losing money playing the lottery. You have extremes on both ends of every distribution curve. But yeah, Verizon is a very safe, very good company. They are huge, man. They're huge. There's a Verizon store right down the road from where I live. There's one in every town in America, probably. Massive company. They do good. Can you look at Swissy versus Aussie? I'm moving home from Switzerland to Australia. So you want me to look at it for the conversion rate alone? I don't know if it would be that way. Yeah, let me see something. How do I close this stupid thing? Where's the arrow to close it? Right there. Okay. Let me look at Swiss franc first. Okay, so there's Aussie. So it's not Swiss versus Aussie. It's the other way around. It's Aussie versus Swissy. So to short it, which you're not going to do, it's actually positive for you. Does it have the juice to go lower? You mean higher. So if you're looking at Swiss franc versus Aussie, you're looking at it backwards. Right? You're looking at it backwards. This ain't the real brokers or the real exchanges. You can get an ICE account, but I mean, so for like all of the main OAND, FXCM, Forex.com, this is going to be this way. So it's going to be Aussie priced in Swiss franc. You are moving to Australia. So obviously your money's better coming from Switzerland. You being in Switzerland, your money is just better than Australian money, unfortunately. And you're moving to Australia, so you will have to convert some of it. You're not going to have to convert it all, but you're going to have to convert some of it to Australian dollars. And yeah, it can keep going lower, bro. Aussie's economy is not super strong. It's not like dying, I wouldn't say. I'd say it's stronger than it's probably ever been, but its currency definitely isn't strong. Not versus the Swissy. Versus the Swiss franc. It looks bad. So you probably, like, if you have a large amount of money, you want to keep as much of it as you can as Swiss. But I mean, there's the conversion, there's your rollover rates right there. So to hold a short on Aussie Swiss, it's going to cost $4.56. So it's definitely better to be long, but in this one's scenario, the trend is down, and that's because Aussie's money is worse than Swiss francs. So people are still shorting this, even though it's expensive to do so, but probably because they're offsetting that risk. They've got other positions opened elsewhere to absorb that rollover rate. Does that make sense? That's hedged, essentially. But the trend does not look good. It doesn't. It does not at all. This might actually be a long, only on the near term. Wrong. Not that one. Only on the near term for upside scalps is what I'm talking about. Not for long-term holds. It's trying to hold support here. But if gold and silver, if they suffer any more downside, then Aussie will go down more. So Aussie does good when gold and silver do good, because Aussie, I guess, has a big mining economy. I think maybe. I know they do for certain gemstones, but for their currency to do good when gold and silver do good, that means they must have like a really good mining economy, period. So yeah, I mean, this near-term upside strength is probably from the upside on gold and silver, because gold and silver just came off this year. This year is when they topped out. And then since they've topped out, this is basically sideways. But you can see that strength. See, there is no Australian currency, no extra Australian dollars in the US, in the DXY basket. None. So it doesn't matter what Aussie dollar does. It's not going to influence USD at all, no matter what it does. But it's been strong. It's been strong since gold and silver has been ripping. Yeah, it looks good. I mean, because of that. Now, obviously, if the dollar firms up and breaks out of a range, it's going to put pressure on it, but still, it just depends on how strong gold and silver are, I guess. Yeah, you're going the wrong way, but I mean, you might have to. Obviously, you can still make money. It's not like, living in Australia is going to destroy your savings or anything like that. But yeah, the currency's not great against your currency. Swissy is a good currency, period. Like USD Swissy is also the same way. Like, look what the Swiss franc has done to the dollar. So like, if you want this, if you want to see this to where Swissy's in front, that's what it would look like. The Swiss franc versus the dollar, Swiss franc is strong compared to the dollar. And that's even with a high rollover rate. It's so weird. Some things are being affected by rollover rates and some aren't. It's the same with crypto. Like Bitcoin's price right now is being highly influenced by funding fees. Those things are important. Can you check XRP? Doesn't the 4-hour MACD turning red indicate silver is going lower? No, it doesn't indicate anything. It indicates that silver went low enough to turn the indicator. The indicator follows price, not the other way around. Price doesn't follow the indicator. All right, XRP, real quick. Wait a minute. Oh, this inverted. There we go. That's better. It's down on the day, but it's above yesterday's high. Yesterday was a really good day for XRP. If I was an XRP bull, which I'm not, I don't own any XRP. I never will buy any XRP. But if I was, I would have loved to seen what I saw yesterday, finally. But I definitely wouldn't want to see it get back down there. So right now, it's essentially just testing the 21-day exponential. It doesn't mean it'll hold, but it could. You want to see it hold if you want to be long XRP versus the dollar. You want to see this hold. If in 2 or 3 days you're closing back under that yellow line, I don't think that would be good for XRP. But it's on the lows, and the lows are exhausting because you're not trending on fresh lows right now. So I'm not going to say that the lows are exhausted, I will simply say the lows are exhausting, potentially. That's a decent sign if that continues. But if the sellers are willing to come down to 129 to get it, that isn't a good thing. That means they're anticipating lower prices and they have conviction that they will receive those lower prices. We don't want to see it lose that stuff. I think it will be fine as long as Bitcoin remains fine. If Bitcoin breaks back down, this is going back down, most likely. The bad thing about XRP is it's still at 121. Oh, XRP went on a massive short squeeze back late 2024 as it was chopping at about 50 cents. So there's still plenty. I mean, you're still trading 200% higher than that, 135% higher than that. So there's potentially juice to squeeze on this. But I do like that it was unable to trend under those fresh yearly lows. That's a good sign. So sellers could be getting exhausted here. It's above the weekly open. That's a good sign. I don't like it for a long, like today or right now or anything like that, but this is also where I would be attracted to sell it too. So, I mean, I could have absolutely been looking for shorts on this thing yesterday. If it's just above the 4-hour 200, I will short it. I won't short it if it's trending above it, right? If you set in a range above the 200 and then break out above that range and then set a higher low and start trending, then obviously the sellers are wrong. But if it's just building in a range slightly above the 200, this is a sell box. The fact that it got above it and then instantly got faded isn't great news. But we'll see. We'll see. I mean, that's essentially what Bitcoin did too. It's going to do the same thing Bitcoin's going to do. I'm not even on it. No, I'm not even on it. Right here. Sorry. See, here's your 200. This is the range that I was just talking about. Just above the 200, I'm more than willing to take a sell. If it breaks out above the highs and continues higher, then I stop being a seller. That's when I'm like, okay, something has changed. So we'll have to approach this differently moving on. But anywhere in this yellow box here, I'd be a seller on this. And it's not good that it came up here and only spent a few hours above it before it lost it again. And right there was terrible. That is not what you want to see. That's a sellable opportunity. Right here at this high, this thing opened, pushed up above that high, and immediately got hammered. That's where we would have been looking to put the risk on. Literally right there. So it's not a great sign that it got hammered. If it can hold higher low support and get back above the 200, that would be good. If you continue to make lower lows under the 200, I would not be a buyer. It still looks really bad on the near term. Bitcoin didn't even get up there yet, but same scenario. I will be I'd more or less be a seller up there, not a buyer. But we'll see what happens with it. All right, sorry about that. Doesn't 4-hour MACD? Yeah, I just answered that. No, the indicators, all of them, they all follow price. So the indicators do what price does. The indicators are all trailing by a specific amount of time. So if you're looking at the if you're looking at the MACD on the 4-hour, that is specifically telling you like 14 candles ago. All averages are based on past time. So Yeah, do not ever. Yeah, nope. Price has made those indicators do that. So it doesn't mean that silver is going to go lower. Absolutely not. It people will look at it that way, but it does not mean it. Right? So like it's just that's like saying it has because silver has come off of the overbought, doesn't that mean it's going lower? No, of course not. No, it does not mean that at all. It can stay overbought for a long, long time. And the same can be said for the MACD, because the MACD is it's just another momentum oscillator. It's different than the relative strength index, but it's essentially the same thing. If you know what to do, and if you know what to play covered call, that is small extra income on your BZ. I know how to play covered calls. Yeah, I know how to sell options. But like I said before, if I'm looking to just generate, like if I'm okay with putting the money in Verizon, it's because I'm not looking for volatility. Each trade that you do on top of just buying shares is automatically giving you more volatility. You're essentially putting more risk on. That I'm looking for dividend plays to eliminate risk but still generate a cash flow. Not for more risk. I got trading capital for that. All right, we're going to wrap it up. You guys have a fantastic rest of your day. We'll go live tomorrow around 2:30. Well, probably around 1:45 so we can get the actual. They're not going to change it most likely tomorrow, so most likely there'll be no change, but we'll be live looking for trades well up into before the news actually starts, because once we get the reading or once we get the actual print itself, then 30 minutes later you get the news. That's when the volatility is going to show up. So we're going to want to look to see if there's any positions even worth taking at that point in time. I don't know that there will be, but we'll look and see what happens. And then tomorrow, big ass news event. It's the biggest event. It's the biggest FOMC for a long time. It's going to be hugely important for the second half of this year. But anyways, we're going to wrap it up. You guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.